Before we get into the episode, a quick reminder that the last trade is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Now for a word from Onramp. Onramp is a Bitcoin asset management platform built on multi-institution custody. We serve high net worth individuals, institutional investors, and financial intermediaries with a best-in-class suite of products, which include multi-institution custody, a spot Bitcoin fund, Onramp Wealth for RIAs, and private wealth services for high net worth individuals. Leveraging our partnership with BitGo and other industry leaders, Onramp's multi-institution custody is a first-of-its-kind institutional-grade vault, requiring 2 of 3 institutions at any point in time to sign once a client's unique permissions have been met. Our multi-institution vaults utilize cold storage, key signing, and authentication at the direction of the client to maximize security for client assets. This pioneering approach to custody is the foundation of Onramp's financial products, which reduce counterparty risk associated with trusting a single institution. To learn more about how Onramp can help you secure a new or existing Bitcoin position, please visit our website at onrampbitcoin.com, where you can schedule a consultation and connect directly with our team.
What you're telling me is that music is about to stop, and we're going to be left holding the biggest bag of odorous excrement ever assembled in the history of capitalism. 1974, 1987, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves.
I say when we sell. Hey, I say when we sell.
And we jumped in. We're jumping in the deep end, the cold water. Big week, Thanksgiving week here in the United States. A lot going on in the markets. CZ. They got him. Ladies and gentlemen, we got him. I think that's what Merrick Garland's going to say in a couple hours here. What do we think? Off the cuff reactions to the Binance news.
It seems that CZ is not Safu.
Mm-hmm. Well, yeah. Andy, that's what we were talking about. This is a good deal for CZ. I said they probably went to him. They said, you see what just happened to Sam Bankman-Fried? He's going to federal prison. It's not going to be nice there. For many years, many decades, probably the rest of his life. Hasn't been sentenced yet. We'll find out early next year. CZ, do you want to spend your life in a U.S. federal prison, or do you just want to give us $4.5 billion?
Yeah, it is a phenomenal precedent. If you're sitting in the government's, standing in the government's shoes right now, love to see max damage done to the first quote unquote victim of government efforts to bring the scammers to justice. Definitely strengthens their negotiating position with CZ for sure.
Yeah,
still a pretty good deal for CZ in my book. I mean, I don't remember what his net worth is, but I recall it at the peak being tens of billions. And Marty, you were saying that CZ is personally on the hook for only a small portion of the $4 billion fine that they're leveling against Binance. So he's walking away with billions still.
Yeah, he's on the hook for 50 mil. That I think he personally has to pay the CFTC. And then Binance, as a whole conglomerate, is on the hook for $4.3 something billion.
So what we say in the finance business is just cost of doing business, right?
Yeah. That's the interesting thing. Like, what is Binance as a business going to look like after this? I think it's going to be completely neutered. KYC, AML compliance is going to be through the roof. The specific charges that were levied stem from the Bank Secrecy Act, particularly dealing with Iran, facilitating some transactions for that country, which is sanctioned by the U.S. and the U.S. regulators. I imagine they're going to have to delist a bunch of the unregistered securities that they have on their platform. And I wonder if this leads to a mass exodus from Binance. Who knows? Maybe it's very sticky, particularly in certain parts of the world, like the global south, where it's used as a payments rail and a bank account for many people. And then I said it, Michael.
Payment rail?
I said global south.
Emerging markets. I'll take the other side of this. I think this is just a metaphorical scalp. I think CZ did it because it's the cost of doing business to get this bull market taken off and the ETF to happen. I think that, we talked about this not 6 months ago. I don't know. It was 3 or 4 months ago, where CZ's the ultimate pirate and businessman, that he takes a step back. He's still going to shadow run the company. What Marty referenced, they probably do for the first 3 to 6 months until Bitcoin's at 100K, and then they just rip it right back open and make billions, and he's on the run again.
Wouldn't shock me.
I think what we're referencing here is the traditional playbook we've seen by like Arthur Hayes, BitMEX, and a lot of these firms. But I think these guys are playing a different game, and it's shown because they're the biggest and been the baddest in the industry. And that, like, I don't think they had the precedent when we referenced with FTX was a fundamentally different charge on, like, I was actually like, I guess sanctions is one thing. So the sanctions, and if they can prove like they were onboarding Iranian firms, but they're not a U.S. domiciled entity, so they would have different precedent. The bigger one is like if they were offering access to U.S. customers, which obviously comes with, charges, but I don't think it's like SBF stuff. So I don't think that was like on the table. It's more of like, do you want us to continue to come after? Maybe it is. I don't know.
Yeah. FTX, pure Ponzi.
Yeah.
Binance, yet to be known. That's another thing. I mean, you mentioned it, paved the way for the ETF. I think that was one of the big holdups with ETF approval was, hey, there's this offshore exchange doing a lot of volume, quote unquote volume, that we need to clean up.
I found the quote. Dylan LeClaire posted this snippet citing some of the objections the New York Stock Exchange has about Bitcoin as an asset, and ostensibly part of why ETF has not been approved yet. But the commission raised the presence of possible sources of fraud and manipulation in the Bitcoin spot market. Such possible sources have included persons with a dominant position in Bitcoin pricing, trading based on material non-public information, manipulative activity involving purported stable coins, including Tether, and fraud and manipulation at Bitcoin trading platforms. So those are, the objections raised to date about why Bitcoin is not a mature enough asset and market to warrant an ETF. And if you read between the lines there, I think a lot of the objection is about Binance and the purported activity there, manipulating the price of Bitcoin and engaging in some sort of outside of the rules market activity. And so that could be some of the main objection to date about an ETF, and that may now be sufficiently cleared, maybe just in terms of kissing the ring more than anything, but that might be enough for regulators to say that they've cleaned up this market and it's now safe for BlackRock's investors and the like.
Yeah, and that's further like emphasized with the Kraken news that came out like a day before about the SEC suing them, which is effectively them saying they're not a broker dealer and they're offering securities, which is also funny because we think about the big boys showing up, that they're probably going to deem these securities and then you can trade them, but you just have to go through the proper channels with these new entities that have stepped in since the recent fallout in 2022 with like EDX and Citadel and BlackRock. So it's not like they're changing anything. We're still going to get altcoins. It's just you got to file with the SEC and kiss the ring and
Well, I wonder if they'd even be able to do that via the regulated broker dealers, because if they're unregistered securities, you have to go through a whole registration process. And can you do that retroactively? I'm not sure. Completely ignorant.
If you pay enough in fines, if you pay the right amount of money, right?
Yeah. I think Andy's got the right perspective. He's seen that the answer to everything is you can do anything with enough of a fine. That's how finance works, isn't it, Andy?
That's it. That's it. Pay the right people, and the game goes on. The cantillionaire money printing game, which is every bit as big a game in quote unquote crypto as it is in fiat land.
Yeah.
In my humble opinion.
Yeah. And Kraken's getting double whammied. They paid a $30 million fine early this year. Jesse Powell came out with a tweet yesterday, pretty aggressive against the Department of Justice, whoever levied the suit against them. The SEC came out against the SEC and said, what the hell are you guys doing? We just went through this. We'll get back to the battle lines and fight you again. But yeah, it seems like there is a lot of action on the regulatory front, trying to clean up the market perceptively. And that's what people are reading through all this. They're cleaning it up before the ETF. Speaking of ETF news, that was another thing that dropped, I think, at the end of last week. Maybe it came out over the weekend, but a lot of the companies that have filed for ETFs, Bitcoin ETFs, made revisions that essentially dictated that it would be cash in, cash out, and they wouldn't be offering Bitcoin in-kind redemptions, which is pretty big news, too. It shouldn't get swept under the rug. We should talk about that as well, because we covered the BlackRock filing many months ago. And that was a big part of it, is that you could take it in kind. Now that seems to be completely different.
I didn't even catch that. That has definitely flown under the radar. That is huge news, particularly in terms of like ETF investors getting access to Bitcoin itself rather than, a derivative product that isn't actually Bitcoin and has all the taxable event fun.
I think. Well, they are buying Bitcoin. I think it's the mechanism as how they're purchasing it in the open market. It's not necessarily like we put it in one of the chats when Marty first shared that shows some of the like diagrams on like the proposed format. So it definitely is Bitcoin being purchased and stored. It's just the process, I think, is a little bit non-traditional than what was initially like thought.
Yeah, but I don't think end customers could take it in kind anymore.
Yeah, well, that was always going to be the case. It was authorized. Yeah, go ahead.
Yeah, the documents made it sound like end users would be able to take Bitcoin, but it was always going to be the authorized participants, which are a separate set of like whitelisted broker-dealer firms who had permission from BlackRock to do in-kind redemptions in large batches. And so there were a lot of little stipulations there that were hidden, but in theory, the end user would be able to take in-kind redemptions. But now, if you're taking dollars, then you always have a taxable event. Because if you're holding Bitcoin, but you have to take out dollars, you are guaranteed a taxable event when you withdraw. But in the previous world, if you were a large enough player, you could withdraw your Bitcoin without a taxable event in theory. Now that wouldn't be the case.
Yeah, it put the nail in the coffin. There was hope that this form of paper Bitcoin would not be Roach motel Bitcoin, where never ever shall coins exit.
That's the phrase you had for GBTC for the last few years, and it has proven extremely true. And now there's going to be an upgraded version of Roach motel.
I wonder. I'm genuinely curious if that's a big surprise, like from folks that have been listening to this or even this group, because I thought we had talked about it when it first came out. I remember from somebody pretty senior at one of the big banks referring to me why, like, independent of any game theory or economic incentive for Grayscale to hold all the Bitcoin, from a pure logistical perspective in KYC ML, it was impossible because of the intermediaries in the middle to deliver from like an OFAC compliant and somebody wanted to take their delivery of the asset and sending that Bitcoin transaction. I heard that about a year ago and it always stuck with me because if you think about, like, imagine BlackRock by way of Coinbase, by way of but intermediary you purchase, sending the Bitcoin to a address that you hold, it sounds literally impossible. Like at the current state we're at, maybe 3 years from now, from these incumbents, they'll be able to do it. But like I would have bet a year ago, 6 months ago, and I guess we just found out last week that will never happen because it just doesn't seem logistically possible.
Yeah, I guess I always assumed that, like, if you were a big enough player that, and a big enough client of BlackRock in particular, that they would make it possible for you. but now not. I mean, like, I don't even know who that would really mean. Is that like CalPERS? That like if CalPERS 5 years from now wanted to withdraw their Bitcoin, they would be able to wrangle that, allotment from directly from BlackRock, but now, taxable event instead.
Yeah, directionally, I can't even imagine it'd be part of the process to not even approve it until that was in place. Right.
I think you're correct, Michael, and have been.
Well, that's the funny part about regulations. You think, if we're thinking long term here, and comparing this paper Bitcoin product to other products, like the thesis is that we transition to a Bitcoin standard, people are going to want to use their Bitcoin. That's why we don't recommend you get into the ETF in the first place, because before this news broke, we said even though there is technically an in-kind redemption clause in this filing, it's unlikely that you'll ever actually get the Bitcoin delivered. Now, it's abundantly clear that's technically going to be impossible via this vehicle. But you'd think they would fight for that in-kind redemption clause just to give people hope that they could do it in the future. Now, I actually think this product is way less competitive with offerings like Onramp's Trust or just pure spot Bitcoin via multi-institution custody product.
Yeah. I think it's a great point that like how quick they were to concede one of the most important properties of the offering that they were trying to put in place. I mean, that really undercuts the like you're only going to go into BlackRock because it's more convenient than the alternatives that would give you exposure to spot Bitcoin without a taxable event. But now, if you're guaranteed a taxable event versus, how much is that convenience of being in BlackRock really worth to you if you're investing in Bitcoin in the first place? Like, you're investing in Bitcoin because you believe in the asymmetric upside of this thing. And so you're investing with the expectation that you'll have a large taxable event in the future, in the best scenario. So why put yourself into that vehicle versus pursuing spot Bitcoin, or in particular an easier vehicle, a private placement trust like Onramp Bitcoin Trust that allows for in-kind redemptions without a taxable event?
Yeah, and then
it just shows how Marty, as you like to say and have been saying for years since I've heard you on TFTC the first time, we are so early.
Yep.
We're so early that still most of the people out there who will buy this ETF, or frankly, who will buy any form of actual Bitcoin or paper Bitcoin or derivative Bitcoin, they still are unaware of the subtleties of these points. I guess in their defense, we all forget after a while how it took a little bit of time for us to understand these differences, and education it always takes longer than we think it will. This is why Bitcoin educators will have plenty of work to do yet for a good number of years here. And people just still don't know. We're still so early.
100%.
Yeah, and this just highlights this insanity of the regulatory landscape too, because you think mechanically, let's just use BlackRock as an example. You buy shares in a BlackRock ETF that gets you exposure to X amount of Bitcoin. It sits in the fund, and one day you want to sell those shares and take the Bitcoin in kind. Like, BlackRock has to KYC AML those customers. Maybe they have a preferred partner. It's like, all right, we're going to redeem this in kind with Fidelity. Now, to get your Bitcoin, you have to go to Fidelity, go through their KYC process, and then give them a Bitcoin address to receive from. Like, it seems pretty simple, straightforward, at least to me, like how they would mechanically do the in-kind redemptions. Maybe I'm too much of a simpleton and missing a lot of intricacies, but it seems like you could create a pretty simple process here if you actually tried.
Yeah. One theory I've heard is this is partially why they went with Coinbase from somebody like pretty deep in the space, is why they went with Coinbase if they ever need to offer that, because Coinbase obviously has the wallet architecture and it's going to be already in the same like account. I think they had that call option to do it, but without doing it up front because they obviously wanted to sit within the fund. The thing Andy references, like the scary part is it just feels, this is like where being around the space, and Marty probably knows best, of like pattern recognition of the cycles. It's like, I feel like this same thing that was being discussed was about BlockFi's lending product and people telling not to go into it because of all the things that people knew about the asset and relending and no bailouts and all the things we've talked about. That there's another topic. It's crazy how quick we forget. Like last year, a bunch of centralized exchanges blew up, and I'm guilty of it. I feel like it's like it was 10 years ago that, we lost like half the market, if not more. And I don't think people coming into this next wave are even going to remember or think about it. It's just going to be, some will, obviously, and we're talking to some of them, but I think it's going to get swept under the rug again. And we're just going to be back to square one with, centralized exchanges holding a large portion of net new clients or net new Bitcoin holders coming in.
Say it ain't so.
Yeah.
I hope you're wrong, but I think you're right.
Yeah, that's just the cycle, right? Like everybody learns the hard way about Bitcoin, and it takes everybody burning their hands on all of the things that Bitcoin is designed to save you from. And first and foremost, centralization. Everybody gets screwed by some sort of mistake there. Copies of digital scarcity, altcoins. Everybody makes the mistake of diversifying. And only then, once you've seen your Bitcoin holdings shrink, do you then realize, oh, this is the one thing that I want to be holding, so let's just hold that and actually use the properties of the asset, which are why I want to hold it, and why everyone wants to hold that particular asset. And that doesn't mean putting it on BlockFi or even leaving it with BlackRock or GBTC. You gotta hold it on chain. Self-custody is great if you're up for it. Multi-institution custody if self-custody is not yet for you or doesn't suit your circumstances. But everyone goes through the adoption curve on their own way of starting from total novice to eventually incorporating Bitcoin into their portfolio as like the base, the foundation of their portfolio. Or at least that's been, my experience and what I've seen everybody else go through. You get far enough down the educational journey and it becomes your unit of account. But that journey requires, going through all these different phases of education before you can eventually get to the other side and reach that plateau of treating Bitcoin as your unit of account rather than some speculative asset, which is how it starts. The beginning of that journey is always some speculative asset that you'll add to your portfolio because it might juice performance a little bit, and you might as well sit in GBTC if that's all you think. But most of the world still thinks Bitcoin is monopoly money, but the few people who are interested in Bitcoin, the vast majority of them see it as some sort of risk-on asymmetric bet. And have yet to learn about Bitcoin as a savings technology or even the digital gold hypothesis or investment case. And so everybody is, it's not even, it's earlier than we even think, because you can count up all the people who are interested in Bitcoin, all the people who come to Bitcoin conferences even. And the reality is most of them don't understand Bitcoin as a savings vehicle. And so that means that even the people who are interested in Bitcoin are still not yet at the place where they've incorporated Bitcoin into their portfolio to the extent that they eventually will. And we're that much earlier to Bitcoin than people even realize.
We're so early. They launched an XRP ETF, and we believed it for half a day.
A brilliant scam. For people who didn't hear that one, this, BlackRock has now issued notice that it is planning to launch a Bitcoin ETF, but then also an Ethereum ETF. And some scammer out there, some opportunist, created an XRP, a Ripple altcoin copy of the same sort of filing notice, and plastered it all over the internet, and people fell for it hook, line, and sinker for about an hour.
Price pumped, then dumped.
Price pumped. I think it was like 17% in the space of like 15 minutes. So whoever, whatever, I guess, what does that fall under, Andy? That's not, it's manipulation, I guess. Just
price manipulation, sure.
Price manipulation. And I'm sure the SEC would love to get their hands on whoever that was, but the anonymity of global crypto markets, who knows?
So I'm going to loop in both of the last two topics. So first of all, in terms of having to go through each of our personal journeys to understand Bitcoin, I've become a total Bitcoin ageist. And what I mean is, anytime someone wants to talk about Bitcoin, I interrupt them and ask them, of course, in what year did you buy your first Bitcoin? And that informs the whole rest of the conversation. Because because if you haven't been through at least a couple of cycles, you just don't have the muscle memory, the lived experience of how things have gone down. And then speaking of Ripple, so my barber, the guy who cuts my hair, big XRP guy, and he always wants to talk crypto with me, and I exercise my patience. Last time I went in for a haircut, though, he says, "Oh, you got to meet this guy who does deliveries from the restaurant next door." And the guy comes in while we're halfway through the haircut, and he just out of the blue just starts pitching me some random crypto, right? And I just interrupt him. I just probably say, "Okay, what year did you first buy Bitcoin?" And he says, "Okay, 2021." And I'm like, I appreciate that you're excited about this thing. I'm not interested in the pitch. Thank you very much. And of course, he's a zealot. He's going, "Oh no, you don't understand the huge opportunity that's coming with this thing." I just said, "No, I'm sorry, sir. You don't understand. I'm sure someday you will. I look forward to talking with you about it then. I'm here to get my haircut. Have a nice day."
It's brutal. It's just brutal because I've been in his shoes in a different different life, a different version of it, a little bit less aggressive version of it. But you genuinely believe when you're an altcoiner, you genuinely think you're onto something because you just don't understand yet. And I've been in his shoes, I guess. You just can't. Yeah, Andy, we've been there.
Well,
never in a barbershop pitching, but
you don't want to pitch
in offices.
Yeah, right.
I've had the barbershop pitch. I've actually had the barbershop, the barber ripple shill before, and it's hard to tell somebody with scissors right by your ear that they've put their money in something terrible that they should get away from. You want to tell your barber to have fun staying poor when he's cutting the hair around your ears.
Oh man, is that why you always wear earphones, Marty? Because you lost one of your ears to your barber?
Yeah,
you just don't want to show it?
The shitcoin barber got me. We set him on the right path though. Eventually, waited till after paid, had the conversation. Hey, maybe you shouldn't be holding on to Ripple.
It's hard. I've stopped talking about it with my friends at all. Like I don't think that I've pitched for a handful of years Bitcoin through all phases of the market, and I don't think I will pitch it to any of my friends for this next bull market. People have either listened or they'll figure it out a different way.
I was thinking about that more of like pitches. I was thinking about something Marty was talking, he referenced, he was chatting with some folks and explaining Bitcoin versus other stuff. And I started like thinking back to those conversations I've had and then also previously. And there's a common thread that nobody ever picks it up unless they're interested. Like if they come to you and say, hey, explain to me what's happening here, you generally have a good chance. But if you're going in trying to explain it, it's basically batting zero because it just doesn't, they have to have some interest or curiosity or it doesn't make any sense.
Yeah, you just end up cell phoning yourself looking like Charlie Day and It's Always Sunny during the Pepe Sylvie episode. Like, trust me.
Yeah.
It's so true.
Definitely that guy.
Had the same convo with a financial advisor prospect earlier today for Onramp, and he was talking about it, how he's trying to get his parents on. How do you do it, Andy? How do you get people into Bitcoin? And I go, I used to try, and now I don't try anymore. I accept inbound questions, and I do my best, and I refer people to educational materials, some of which I have created, some of which you gentlemen on this call have created, and that's all you can do.
Yeah, I think that's a big part in the Bitcoin only, though. I think like I was chatting with another one. We could talk maybe later on the pod with an RIA firm. He's like, I don't know what's up from down and all this. I was like, look, we'll happily educate you, but it's only Bitcoin, and we can explain why and why that'll help your net clients in coming in. And I think ideally we can just start there, and then you don't have to go through the pain and trying to It's whatever the term is. It's always harder to refute BS than to like spout it. And so it's if we can just get ahead of like the education at the first touch point of like, this is the thing, don't go any other way. If you do, it's on you. I think we probably make everything a lot smoother.
Yeah, I believe that's Brandolini's law. BS is 100x harder to refute than it is to put out in the world.
Good one.
No, but this provides,
especially when somebody's bags are tied to it.
Right.
Once you got a heavy load of XRP, you're done.
Thanks for tuning in to The Last Trade. If you're enjoying the show and want to dive deeper, check us out at onrampbitcoin.com, where you'll find a full suite of institutional-grade research and analytics, including our recently published white paper, Bitcoin's Full Potential Valuation, and our new tool, the Onramp Terminal. Now, back to the show.
This provides a good segue
Yeah.
to jump into Andy, your backstory. Recently joined Onramp. You've been having these conversations with RIAs, wealth managers for years now. And I guess that's how we can approach like your history in the traditional wealth management space, why you came to Bitcoin, what your experience has been like, and sort of where the disconnect lies on both ends, like Bitcoiners trying to pitch to wealth managers and then wealth managers trying to understand Bitcoin.
Yeah. By the way, Andy, welcome to OnRamp. We're excited to have you.
Welcome.
Pretty awesome development in the last few weeks for folks who don't have their ear to Bitcoin Twitter at all times. So Andy, I guess as part of your story there, make sure to incorporate that. Recent development.
Absolutely. Well, I'm super stoked to be here with this elite team, which is small but growing. And so yeah, my finance and Bitcoin story. So first decade for me was TradFi, working on the dark side, Goldman Sachs investment banking, private equity fund that spun out of the Carlyle Group, and then a multi-billion-dollar hedge fund that was bought by, you guessed it, BlackRock. So that was first decade for me. Second decade, I decided to join the family business. That's a firm called Westcap Group, which does financial advisory and wealth management. And so that's been a fun journey for multiple reasons. Great working with family, great, sort of being my own, effectively my own boss, working with actual people instead of faceless institutions, all of the above, growing, obviously, and some lifestyle benefits as well. So I found, I was a 3 exposure guy on Bitcoin, like many people are. Third exposure, well, first was an article on The Economist, 2013. I didn't get it all. Second exposure, I think was 2016, was the Ethereum hard forks on article, didn't get it all. Third exposure had a very very smart friend who now is very senior in AI at Facebook. And he had a friend who he introduced me to who was raising a fund, a crypto fund of all things. And so that's how I started to fall down the rabbit hole. Bought my first Bitcoin the day after the Bcash hard fork, not because I was waiting for the fork to see what would happen, but because I was just trying desperately to fund my Coinbase account. And that was when the money cleared, or the first of the money cleared. So, did altcoin stuff for about a year. And then in the beginning of 2019, at the bottom, or the local bottom, was 3K Bitcoin. Started writing a book called Why Buy Bitcoin. And that was partly to test my own thesis on Bitcoin. Like, oh my God, I bought at a pretty decent price. Price went up a lot, then crashed. Now I'm actually underwater on my purchase. What's going on here? Am I wrong? Or does this thing actually have legs? So published that book in September 2019. I actually met Corey Clipston of Swan, I think the next month. I sent him a copy, and he and I sat down, and it was love at first sight, so to speak. I immediately recognized Corey was multi-talented, brilliant, ambitious, and had a vision. And so I decided to write a check into the seed round at Swan, and was an advisor there. And then was in a position to, he asked me to join the board. This was in 2021. And we had a departure. I was still working full time in my financial advisory practice, and just, really very, very part-time advising Swan. And the guy that Corey had hired to launch Swan Advisor Services, departed. And so I had talked with Corey about, hey, we need to get this thing off the ground. I guess I'm the guy to do it. And he said, yeah, I guess you are. So spent about 10 months from zero to version 1 of that product, launched it into the marketplace. And got good traction. Of course, then the year 2020, late 2021 to 2022. I hope I'm getting my timing right, but let's just say a lot of things happened, so I ended up departing Swan a number of months ago, and honestly, I'd always wanted to work with Jesse. Jesse is one of my closest friends in Bitcoin. I saw that the team that had already been assembled, whether it was Kevin, whether it was, Marty and Michael, obviously on this call here, whether it was Cam, it's too long a list to name everyone, including our great advisor, Bill, David Thayer. I was just keen to be working in Bitcoin again, and specifically, I was keen on this team and multi-institution custody. I mean, the events of the last couple of years just shone a spotlight on the fact that any single custodian is a risk, and it's a risk for individuals, who should self-custody anyway, but it's especially a risk for anyone managing money on behalf of somebody else, because most of those folks are fiduciaries and they have duties of care that they have to observe. And in a world in which multiple single custodians have failed, they need a better solution. So I think the time is now in two respects. One, for multi-institution custody, given what's already happened in the space. And number two, financial advisors finally being ready, I think, to move in mass. That's partly because of the ETF, like we talked about before. But yeah, facts and circumstances are aligning for a huge opportunity ahead for the financial advisory space, for Onramp in particular, which has multiple products, not just for financial advisors. And I couldn't be more excited about doing my small part to help build the platform.
Yeah, and for context, for numbers, I was just looking at the most recent. So there's $110 trillion managed by RAs as recently as 2020, as the numbers were reported. And so you think about, like, to Andy's point, they've been hesitant for a number of reasons. I think 80% of that wealth that's been like crypto related. So somebody that's been managing their wealth with the financial advisor, 80% of it sits outside of the purview from the billing or the visibility for a number of reasons, and Andy can speak to them. But the main point here is, like, directionally to build the right product solutions, and also the timing. I think we're all aligned that there couldn't be a better time to get out in the market and educate advisors and give them the right resources so they can educate the end client on all the things we talk about here about preserving wealth and doing it the right way. So we're definitely as excited as Andy is, and I think there's a huge opportunity ahead of us.
Yeah, Andy, thrilled to have you. And it is interesting hearing how your evolution, your journey has had learnings even after you arrived at Bitcoin, and have been a Bitcoiner for some time. But custody has become a fresh topic of interest for everyone involved in Bitcoin, and that, as you say, shines a light on the possibilities of multi-institution custody specifically. And I really think that we are entering a new era of Bitcoin custody that is going to be all about multi-institution custody, because it is a superior way to custody assets than any other version that exists in the traditional asset landscape. It's brand new to the world. And it's a very exciting time and new wave to be riding because of that. And I think it just sort of speaks to how everyone in Bitcoin is still learning. All of us on this podcast are very much still learning about Bitcoin. I learn something new about Bitcoin every week, and I think sometimes people are a little bit surprised that, like, I'm on Twitter completely ignorant about aspects of Bitcoin. Especially, like, recently, I stumbled into a gaffe of believing that transaction fees are the same for different types of Bitcoin transactions, but they're different for there's a different block space demand for different types of Bitcoin transactions based on how many UTXOs are going into it and if it's multi-sig or not. And that was a learning moment that I had this week, just because I don't spend that much time interacting with that side of Bitcoin, the really technical, on-chain side of Bitcoin, or the mining side of Bitcoin for that matter. But as Bitcoiners, we're all learning, and that includes learning about custody. Even for us finance professionals, Andy, you, me, who think we know a thing or two about custody and custodying assets, but then Bitcoin shows a way for this digitization of value to create a superior form of custody than has ever existed in the traditional asset landscape. It's just a very exciting time.
Andy, are you cooking a Thanksgiving turkey, or what's going on with that?
So here's the honest answer. I actually thought this Zoom was supposed to happen an hour later. My mistake. And I had just laid down to shut my eyes to take a nap, basically. And so I was going to snooze for 45 minutes, and that was my alarm to wake me up in advance of 1:30 p.m., which was an hour late.
If it wasn't Thanksgiving week, I would have called out. It was just a funny came to mind.
Oh man! Well, I might be a little shorter on sleep than I have been, perhaps in the last couple of weeks, maybe on account of things. On all the work getting up to speed here at Onramp.
Yeah. Marty, Yeah, it's definitely a good reason. One thing I don't know if I shared with the team here that I'm insanely excited about, and this goes back to Jesse, the stuff he does know or he does very well, is the content being produced. Because I think as we're learning from folks that we've known in the industry that even if you do go and win the quote unquote logo at an RA and you go partner because they actually want to look at digital assets and get their clients exposure, that's actually, in my understanding, it's very hard, but that's almost the easy part in the equation. The real hard part is getting the advisors ultimately that are part of the RA or part of the wealth management team educated on the assets or assets if it's crypto or Bitcoin only, and like having some kind of fundamental thesis on why they're taking to their client, and then ultimately having the materials to take to the end client to look at the asset and look at it from a portfolio allocation and or what are all the attributes and how do they want to think about it from a time scale. And where I think our team that's assembled and being assembled along with the content is uniquely positioned for that, because it's one thing to go again win the logo quote unquote and work with the wealth management team, but the other thing to empower them with the right resources, education, the terminals, a component of it to really provide that end client. One, it's only Bitcoin, but then two, here's all the information to really look at it from different perspectives that we all know there's no silver bullet in the space. It's really putting it all together. And so I'm really excited about that because I don't know if it's really been done well yet. I think Fidelity's probably the closest and they're really picking up steam. But I think that's personally like something I'm really excited about.
Absolutely. One of the truisms of the space that was true years ago and is still true today is education, education, education. I mean, it's the topic is so multifaceted, so complex, so difficult for people to understand, plus just the basic cost of admission in terms of doing the work. I mean, it's like anything. It's like any learned set of knowledge. It's yes, if you have someone pushing great content at you, just like having a great teacher in school, much reduces the difficulty of absorbing the information. That's super important. Just as, of course, is effort, expenditure, and engagement on the part of the learner. And so somewhere in the middle of those two things is where learning and understanding Bitcoin occurs. And yeah, it's gotta happen on both ends. And fortunately, we've been watching Marty and listening to Marty for long enough that we all have some sense for things that work and things that don't work in the educational area. And so yes, we have a very solid team that's been educating people and talking with people about Bitcoin for a very long time. And I think that's a huge leg of the stool for the success of Onramp.
We all stand on the shoulders of giants. There was many educators before me as well. But no, I've been doing this podcasting, writing newsletters for 6.5 years now, which is hard to imagine, hard to believe. I'm an old veteran now, but that's the one thing that makes me most bullish over the course of that 6 years is to see the amount of content creation. And people can besmirch the industry of content creation, but it does have a lot of value. And that's one thing that is really bullish over the last 5-6 years, particularly, is that there's been a ton of high value content creators that really understand Bitcoin and, more importantly, how to articulate it to different audiences, because my flavor of delivering the message is much different than Andy or Jesse or Peter McCormick's or other people in the world. And people really resonate with particular ways of portraying a message, which is important. So we've had many different types of educators come to the market over the last 5 years, portraying the message in a very particular way that resonates with particular types of people, which is really good. It's just going to help speed things up as we move forward.
Yeah, I think it's a big part of how this all goes. Is every year, every cycle, really, the barrier to understanding Bitcoin drops because the events in the world help make the Bitcoin value proposition a little clearer. But I think bigger than that is the quality of educational resources, and the number of educational resources keeps growing. And we're all collectively homing in on the core message, at least to people like us. I think I've improved as a Bitcoin educator. I'm sure Marty and Andy feel that they get to the nut of it a little bit faster or with a greater ease, and brush aside all the noise more effectively when communicating the value proposition of Bitcoin. And we're all doing that as an industry. We're doing that as an asset class. It's becoming clearer and clearer what this thing is, and that only continues. It's kind of hard to imagine Bitcoin education getting better and simpler, but it will. It has, and it will continue, and that will reach so many more people. And all the people that glaze over when you talk about Bitcoin, eventually the message will become so simplified and so clear that will get through to them, and that glazed over look will be instead the epiphany look of realization.
Yeah. And
that's my hope. That's my hope, guys.
It's working.
Just gotta keep trucking. One day at a time, 1 week at a time, 1 month at a time, 1 year at a time. Slowly but surely, more and more people will come. The waves get bigger. People will stay get larger. The amount of people will stay get larger.
Yeah, and the people who take the risk are rewarded, and then they, a cycle later, they're the people that other people listen to. Like I was talking to a wealth manager earlier this week who has his clients, a small group of his clients, a pretty heavy allocation to Bitcoin, in particular because he wants that before the halving. So he's either going to be proven very right, and a lot more clients are going to want his advice, or we're all wrong. This is going to be one or the other, and the halving is coming along to mechanically show us who is right and who is wrong.
Yeah,
that's it. I was one of the conversations I was having earlier in the day today with a financial advisor was on that topic. His perspective. He was talking to his business partner, his senior partner, really, into whose shoes he may step, when that person retires. And the conversation was, something along the lines of his partner saying, look, I understand you want to put this in the portfolio, so that your clients' portfolios perform well, given the facts and circumstances, and likely we're in a bull market and the halving and the ETF and all the positive catalysts. And he corrected his partner saying, no, I don't think you understand. Yes, this is for the benefits of the clients, but it's also a defensive self-preservation move for our business as an advisory firm. Because if we miss this opportunity after it's been, I don't want to say this obvious, but it's been apparent for a long time what value this asset Bitcoin offers, we're gonna be in a tough spot if we miss this opportunity. Essentially, a second time around, a second cycle around. It really wasn't on the radar 2 cycles ago, but last cycle it certainly was. And we're finally getting to the point where, really, honestly, fiduciaries are probably negligent. They're certainly negligent if they haven't done their research and understood Bitcoin. Advisors have every right to do their proper due diligence and the research and reach the conclusion that Bitcoin isn't appropriate for their clients for whatever reason. That would be a surprising conclusion, but in theory they could. At minimum, they need to be educating themselves, doing the work. And I'm pretty confident that those that do the work are going to end up buying and accumulating on behalf of their clients.
Andy, can we like expand on that? Like game out, how do you see this at least next cycle playing out? Because I know like the last cycle there was a lot of RAs kind of getting set up, and then FTX happened, and they basically all hands off, like, all right, we're not touching any of this. But like, do you see price appreciation and then wanting to get in because they're looking at raising, fees and assets under management, or is it, kind of bottoms up from the end client being like, you need to hold this thing, or I'm going somewhere else? Effectively, like what takes it away from being radioactive? Because that's where I feel like that's the part of the market that's most radioactive, where you don't know. I was just chatting with one again before this call, and he was like, I don't want to keep you up to the recording. I was like, no, it's perfect, because this is getting me set like to go. And in that term radioactive came up because I didn't know how to position it with him, because it's the one persona that can be like, we're never touching that. That's insane. And he loved that like term. So I'm just curious, like, how do we get past that? Or is it just going to be multiple cycles before we kind of, or is it a gradually and suddenly type thing?
Yeah, no, Michael, I love that question. And it's obviously key to the development of the business and the industry. And look, I'll be the first to say, I was wrong. I thought last cycle we were ready, right? I went and I built a product in anticipation of lots of demand from financial advisors on behalf of their clients. And then FTX blew up, and 3AC before that, and Do Kwon and all the shenanigans. So I thought that cycle was a cycle. I'm even more confident this time around, though, because not least because the 4-year cycle has maintained, not least because SBF just got convicted on all counts in dramatic fashion. So that, I think, period is hopefully behind us. I think the facts and circumstances we already talked about, with Binance losing market share, with Coinbase, on one side being sued by the SEC, but on the other side, being offered the potential carrot of getting all this custody business from the ETFs, plural. So anyway, but how will it go? For sure, there's bottom-up demand. I mean, how many times does Bitcoin have to not die and come back from the dead for clients to pay attention and demand either to own it or to understand it, or to have it included by financial advisors in their portfolios? That's for sure a big part of the situation. Another part of it is, the more and better educational resources. It's easier for financial advisors to get up to speed. A major part for FAs, is being able to bill and collect fees on this stuff. Obviously, they'll be able to do that with the ETF and a Schwab account, but that being paper Bitcoin with a single custodian is a poor substitute for actual Bitcoin with multi-institution, multi-sig custody. So, I think that all of these, I think of all of these factors as being significant, and just pure size. I mean, if this bull run turns out the way I think it will, the way probably all of you in the room here think it will, I mean, that puts Bitcoin on the map as a multi-trillion-dollar asset class. That's pretty hard to ignore. It's at that level, it is the perfect combination of too big to ignore, but also still tiny in the grand scheme of global assets of hundreds of trillions of dollars, close to $2 quadrillion in global assets. A few trillion is still peanuts, doesn't move the needle. So it's all of the above, the market maturing. Who knows? Maybe we get more sovereigns involved in this cycle. Clearly, we're going to get institutional money, and clearly, we're going to have just more average investors, average people that want to save their money in something that is limited supply, not something that the government can keep printing more of.
Yeah, I have like a scale that on one side keeps having pebbles added to it. And, at some point there's a tipping point, right? And Andy, you said a word earlier, you said the word negligent. And that I found that very interesting. At what point do you think it becomes negligent for wealth managers, financial advisors, to not be getting educated themselves or talking about the possibility of a Bitcoin allocation with their clients?
Yeah, so I went public on that score, I think a couple years ago. I can't remember the exact time frame. So my feeling is that we're already there. Now, the counter argument would be, well, okay, but since then, there have been failed custodians, there have been ruggings, there has been some ongoing regulatory uncertainty. Some would argue, although really, if you do the work on Bitcoin, you see that Bitcoin is basically a regulatory Teflon. So I think someone who would argue, no, it wasn't negligence several years ago, for those, would highlight those reasons. But yeah, I think that with custody solved, I think that with Bitcoin's price correlation to stocks and other risk assets, reversing back towards zero like it used to be, it was an uncorrelated asset, and then it was correlated for a while, and then uncorrelated, and then correlated again, and now it's uncorrelated again. So over the long run, uncorrelated, yet there have been periods of time when the correlation has been higher with other risk assets. I think that factor helps. And yeah, I think that getting some of these prosecutions and legal issues behind the industry are all supporting facts, argue in favor of it being negligent not to at least do one's due diligence and research on Bitcoin, and arguably to own it in all client accounts. Certainly, I've felt that it's negligent to not own Bitcoin for my clients, and I have felt that way and executed on that feeling for several years now.
I think it's romantic when we talk about the negligence or like treasuries need to hold. I think what ultimately happens is the game theory just plays out as it's supposed to, where like gaming out, if a client's hold 1% to 2% right now, if we're saying 80% hold them off platform and it's 1% to 2%, and based on what Andy referenced, we did a 5 or 10x. Well, that's 10% potentially of the client's portfolio. And at 1% to 2%, I think like when I referenced, I'm working through this as Andy was saying, it's like we said radioactive, and while it's radioactive, it's kind of like radioactive because those people are the loudest. And so it's probably less radioactive for that segment of the market. It's more of neutral, but it's neutral to maybe negative. But because it's only 1% to 2%, it's like, well, what's the upside in going and investing in infrastructure resources for it? Because it's only 1% to 2%, and I don't mind it being off platform if I just get it out of my way and I don't even want to bill on it. But then if it goes to 10x, if again, staying still, there's no more demand from clients like capital outside of the account or net new clients. Now it's like, well, I'm missing out on 10%. And on a book, if somebody's managing, a couple $100 million, that becomes material from what you're paying. So I think like, does that make sense, Andy? On that could be another driving force, is just basically the client's a balance. It gets so high relative to their overarching portfolio that they're like, hey, bring this in-house. We have a solution for it, and we can now bill.
Yeah, absolutely, Michael. I mean, imagine, the client who has substantial portion of their overall assets in Bitcoin, and their financial advisor is still pretending like it doesn't exist. Like can't talk about it, can't acknowledge its existence. Like Bitcoin, what? That's like, what is that? Like the word Voldemort? Like it can't be uttered. Word that cannot be uttered. I mean, it becomes ridiculous, as you say, when the numbers start to become material for the client. The other thing I'll add to that comes to mind is narratives and FUD. I think it was almost 2 years ago, I published an article on Bitcoin Magazine, and the title was something like, Bitcoin is the most ESG friendly investment in my clients' portfolios. And people at the time thought that was nuts. I mean, that was sort of peak peak blowback in terms of energy usage and the environmental narrative. Marty, I know that's near and dear to your heart. And I've actually been surprised at how quickly and thoroughly that has reversed. I used to get questions and comments from multiple clients bemoaning basically energy usage of Bitcoin, as well as criminality in Bitcoin, and obviously that's just been factually erroneous for years now. But I have been surprised and pleased at how quickly the narrative has shifted to in the correct direction, which is the opposite of where we were in terms of the narratives and the FUD just a year and a half ago.
Yeah, it's such an exciting story, Marty, I know that you disagree with all things ESG, but I'm thrilled to see the positive spin of Bitcoin as as a good ESG, quote unquote, good ESG.
Till they rug you, Jesse. Till they rug you.
We're gonna rug ourselves.
Yeah. Well, I love hearing the arguments about methane capture. There's no other use case that it really makes sense to try to do methane capture for and make it economic. But here's Bitcoin to plug into your landfill and capture methane. If that's what everybody is worried about, here's Bitcoin. It plugs in to satisfy. It's this panacea for environmental concerns. And whether or not we should be focused on that at all, different story. But I just love that there's an exciting narrative that people can focus on with regard to some of these hot topics that people care about.
I agree with that, but only up to a certain extent. We discussed it last week. The one thing I worry with the Bitcoin mining industry catering to ESG is the particular line of thinking that we're going to incentivize the build out of wind and solar. And as we discussed last week, with the first 22 years of this century, what Germany did to more than double the capacity of energy generation, but actually reduce actual generation over that decade while doubling prices and decommissioning nuclear, coal, and natural gas plants. That's the one thing I worry about is if you cater too hard to the ESG and you go along with it, we'll build all your wind and solar. That, number one, is not going to be economically viable in the long run because those things are heavily subsidized. And if Bitcoin's successful, the subsidies go away and your mining operation becomes unprofitable overnight. And then number two, more broadly speaking, it's just not good for the grids. I don't want to dive too deep into this and rain on your ESG parade, Jesse, but that's...
I think it's an important... It is an important frame because this reminds me of, this is a little controversial, but Malay, if that's his name, the president, he went viral with a pretty crazy 2 minutes, but he references you don't negotiate with these people. And the reason why you don't is because of the concept, easy choices, hard life, hard choices, easy life, or easy conversations, hard life, hard conversations, easy life. It's if you get ahead of it and you frame it's supposed to waste, or not waste, it's supposed to use lots of energy and that's good. And then you break it down. Then you back into, okay, well, maybe it's harder up front, but then you set yourself up for success further down versus the catering or whatever reference. So anyway, that's just more of the positioning that it can be. It's similar with the BlackRock stuff. It's oh yeah, it's great, price pumps until everyone gets rugged and oh shit, we should have had the hard conversations.
Yeah. And speaking of, we're talking about somewhat internal bullish catalysts, whether it's education, the ETF imminent approval, Binance getting pushed to the sidelines, the grift, leaving the industry, but externally too. I wrote about this in the newsletter last night. The geopolitical situation is really setting the stage for a Bitcoin pump because things at the international foreign exchange level are really beginning to get frothy. You had Saudi Arabia, their minister of foreign affairs basically come out last week, and we're going to go on a tour to try to push for de-escalation between Gaza and Israel, and explicitly mentioned that they're going to go to China first, saying, hey, China, in our mind, is the most important geopolitical partner that we want to convince for this particular issue, which is a big signal. It's not the U.S. that they're going to go to. Number two, right off the heels of that announcement, China and Saudi Arabia announced that they're opening up a currency swap line of $7 billion over the next 2 years, and that they're going to begin settling trades outside of oil between the two countries and their native currencies. $7 billion is a drop in the bucket if we're speaking about global assets and global markets. However, it is a step in a direction away from U.S. hegemony and Saudi Arabia really leaning on U.S. And then on top of that, rumors are beginning to spread that China is underwriting loans in Latin America, in Africa, particularly for raw materials, energy resources, and they're giving these countries dollars up front, but on the back end, they want to be paid out in yuan. And so at the international level, you can see the steps away from the U.S. dollar reserve system for the world beginning to materialize, and the drumbeat of Saudi Arabia joining BRICS countries gets louder and louder, which is just going to be incredibly chaotic for global currency markets. And as we've said before, we should expect this trend to continue. I would argue that it's the wrong solution. I don't think Saudi Arabia, China, India, the BRICS countries are going to be able to create a formidable fiat currency that is better than the dollar, or more importantly, better than Bitcoin. Like, I think the solution to this is the apolitical monetary rails, which is the Bitcoin network. But there will be a period where, due to the geopolitical pissing match that the world powers find themselves in, the group will try to defect from the U.S., create their own currency. That'll inevitably fail. And then people will realize, oh, Bitcoin was the answer the whole time. And that's a massive tailwind for Bitcoin adoption over the next decade.
That's it. I couldn't have said it better myself. I really like the way it's playing out too, which is probably all of us at one point thought that hyper Bitcoinization was happening right now being some point in the last however many years. And at the same time that the dollar will lose market share to Chinese yuan or other countries, it's still so dominant that it's likely to take a very long time. And this gives more time for companies like us to build on Bitcoin, and also for the protocol itself to continue to harden. And so, yeah, I am simultaneously bearish on the dollar in the very long run, and yet not that bearish, in the short and medium run. I think the dollar probably has a lot of legs left. I think that, as maybe you were implying, Marty, in a world that's become more multipolar, people want different options. And if you want different options, maybe one of those options should be Bitcoin. But, oh, by the way, you're probably not going to dump the dollar anytime soon. Oh, and also, if stable coins continue to flourish, that's incremental demand for dollars at the same time that Bitcoin is taking market share from everything. And so, I mean, it's kind of a perfect story and process of evolution for Bitcoin, which is, it's not happening too slowly and it's not happening too quickly. It's sort of the Goldilocks scenario at the moment. Now, granted, that could change at any time. Who knows what the future holds? Maybe it'll be a more violent transition. Of course, that's possible. I hope it doesn't go that way. I used to worry more about it going that way. I actually worry less about it going that way. But that's just my 2 cents and my perspective on how I think it's most likely to play out.
Yeah, we're all afraid that hyper Bitcoinization is going to happen and it's going to be too jarring for the world. But it turns out people are really slow to realize the value of the value proposition here, and slow to adopt. And so it kind of works itself out. But Marty, what you were talking about, all these events right now, this is what Zoltan Pozsar was writing about almost 2 years ago at Credit Suisse, when Credit Suisse was a thing. And the Ukraine war had just broken out, and he wrote this incredible piece proclaiming the death of Bretton Woods II monetary system and the beginning of Bretton Woods III monetary system, which he characterized at the time as a shift from inside money to outside money. And it's a little bit of ambiguous term, but what he meant was that for the last 30 years, the global reserve currency and currencies that, all the big currencies have been somebody's liability. You hold U.S. Treasuries, that's a global reserve currency, and it's the United States liability. And that is fine so long as there's stability and no risk of any kind of default, soft or hard, inflation, or throwing your hands up and saying I won't pay it. And now with cutting Russia off from the SWIFT banking network and seizing their foreign exchange reserves, suddenly that era is over. And that's what happened almost 2 years ago now. And Zoltan pointed out that means, the global monetary system has to gravitate towards a new de facto for what is money and what will be used as reserve currencies. And the shift has to be away from liabilities, away from inside money and towards outside money, aka money that has value outside of the financial system, meaning commodities, meaning things that have a market value because they are commodities. They're tangible things that people need and trade for. And he meant oil and gold. And he, at the very end of that note, observed that, he's not a Bitcoin bull, but if any asset stands to gain from all this, it's probably Bitcoin. And here we are watching that play out now with, with Argentina having so many problems fiscally that they've elected an anarcho-capitalist politician, which is a very interesting and sort of exciting development. A libertarian is now president of Argentina and is a Bitcoin bull. And what does that mean for Latin America? Because we have El Salvador that has already shifted, was already dollarized, meaning that the dollar was legal tender there, and they added Bitcoin. So Bitcoin is also, an official currency of El Salvador. They have two. Could that happen to Argentina now? Maybe. Maybe they dollarize. Maybe they also add Bitcoin because, if Milei follows through on that intent. And then you're talking about Latin America seeing these canaries, really, countries that have had weakness in this era of inside money. And El Salvador, was a broken state for so long that the populist appetite shifted towards, let's change it. Let's radically shift and let's try something new. And that has led to Bitcoin. And the same might be happening in Argentina. And as those cases prove fruitful, more of Latin America may follow. Other canaries in the global monetary landscape, countries whose currency are not as strong as the dollar, but I guess not as weak as El Salvador's old currency, and Argentina's recently. And so you're seeing this shift in real time of the dominoes falling, the canaries falling, that cause a shift away from U.S. treasuries or other even weaker currencies than that, and towards the case for a BRICS-based oil and gold-backed currency. And meanwhile, Bitcoin just keeps getting stronger and keeps being the actual solution that people will eventually find as they search for the best kind of outside currency in this new Bretton Woods 3 era.
Yeah, I think this is an important discussion because most people would think like you come on, we're going to, Bitcoin wins, it's all game over. And this is really nuanced in the sense of like, if you look long enough, you see how that plays out, but then there's this intermediary period, and it's a very long period, probably 10 to 20 years. And I think about it like what Andy and Jesse were describing, Marty, it's like Bitcoin sits at the center, and then these like three currencies oscillate around it, and it's the dollar, and then it's whatever they create, and then it's gold. And whatever they create is like this quasi CBDC, and it just continues. Like as people get educated and rugged, you just keep taking more and more of the market share, and we're just going to keep going back and forth. And Bitcoin's going to gold's going to do its thing, and then people are going to wake up one day when they get the tungsten and the tons and tons of it. They're like, wait, why are we transferring this thing around in planes? And they're shooting them down, and they're like, oh, it was Bitcoin the whole time, and we're just watching them like try to create Bitcoin, and it already exists. But to Andy's point, it's like it's kind of exciting. I'm grateful after you look longer at it, it's like we got time to build stuff and not be scrambling, and it's less chaotic, and we can sit here and do this and educate and then build products and services, and so it's fun that in my opinion it's going to take a little longer because I think it's a natural course of things,
and selfishly it'll allow us to stack more sats.
Yeah, and the risk of persecution is higher if it's more sudden change. The gradual change is much better for Bitcoin holders in that sense.
When Marty, I remember you years ago making the astute point that this stuff takes time. What was there a singular moment in your mind when you sort of came to that realization with respect to Bitcoin, or was it just learned, over time by you?
I mean, patience is a virtue. Falling back to that, number one, but no, number two, really understanding like early days New York of of my show and my newsletter, really diving into bit devs and the protocol development, like literally to build out the infrastructure that will onboard people takes time. I think that it's interesting because it really runs in parallel to the education piece that we've been talking about throughout this conversation. It's like they both take time. And literally if we're going to onboard billions of people, it's going to take time to build out the protocol infrastructure and the layers on top of it and all the tools and services that help people get onboarded onto Bitcoin. That literally takes time to build that.
So was it BitDevs New York when they're pulling up the list of BIPs and you realized that a lot of these things had already been on the docket for years and maybe this stuff is going to take a while?
Yeah, I mean, getting changes in the Bitcoin happens at a glacial pace. That was really internalized going to BitDevs. Like I remember my first BitDevs ever was January 2015, a couple months after I moved to New York from Chicago, and they had just announced SegWit there, like how it would work. It wasn't until 2.5, 3 years later that it actually got implemented.
Wow. Yep. Which in the grand scheme of history is not that long. Feels like a long time, though. A lot of things happened in a few years in Bitcoin.
Yeah,
this time last year feels like a decade ago, and all the exchanges and everything. It was literally just a year ago.
Yeah, it's insane. Gentlemen, this has been great. Should we wrap up? Thanksgiving week. What are we thankful for?
I'm thankful that I only have to eat turkey once a year, and that every other day of the year I can eat beef instead.
That's good.
I'll go. I was going to say it earlier and we moved on. One of the things that's really exciting, like going back to getting a little sentimental is why we're going to win, is the financial advisors. Like, I don't know, and maybe I'm missing an asset, and Andy, you keep me honest, where financial advisors are incentivized to have purview and bill on the assets and direct relationship with the client. And never have I seen such, obviously, like the importance from the recognition of importance from a financial advisor for their clients to get exposure in the right way when you're in these like networks, these groups. Where I had met one a couple of years ago, and I'm in Pittsburgh visiting family, and I met with him in person, and he told me at this coffee shop that he meets after work and sets up the Trezor for the person outside of work hours and outside of the billable hours. to get them set up in the right way. And those are individuals all over the country, probably all over the world doing that. And so outside of family and all of that, being thankful, like I'm just thankful for the people in the space that are very interested and willing to go out and step outside. And that's why we're ultimately going to win, is because you can't like stop that. Like there's no, that's an idea that's just like always going to be there. So yeah.
Me too. And several of those advisors who are doing right by their clients are personal friends, and I'm grateful for them also.
Yeah, I'm grateful for a lot of things. A new chapter right now for me, moving to Texas, and a lot of excitement around all that, and the family is happy and settling in. So that's really the story of this Thanksgiving season for me. But to bring a little bit of Bitcoin into it, because that's what people really care about. I just realized I think we are now, well, depending on average block time going forward, we are at or just under 5 months until the next halving. So once we're in 4 and change, that feels awfully close, and I'm thankful for that.
You love the halving.
I love the halving. The halving is Christmas. The feeling of Christmas when you're a child. That's what the halving is for me now.
And it's all the more special because it only happens once every 4 years. It's not even every year.
It's Christmas times the Olympics.
Yeah. It's the Olympics, the presidential.
Yep.
Lines up with presidential election season.
Which I think is why, that's why it's 4 years. Because how many years are you in college, high school? 4 years, Olympics, 4 years, World Cup, 4 years, presidential election, 4 years. There's so many rhythms in life that I think that's why Satoshi was like, 4 years seems to be Lindy. Let's go with that.
I guess I'll wrap it up here. Yeah, I'll echo what you said, Jesse. Thankful for my family, wife, 2 boys, mother, brother, sister. Tough year for us personally. Lost my father, but I think the family support, the friend group support, and most importantly, my dad was really passionate about what we are doing here in Bitcoin. And so I'm thankful that we have something that we're passionate about to work on, really go for. Makes it easy to wake up every day. Gives you purpose in life. Happy to have purpose. There's a lot of people out there who don't. So thankful for that.
We're thankful for you, Marty, taking the load off our shoulders, and we get to show up and you steer the conversation. So
you guys aren't half bad. So don't sell yourself short.
You're only half good though. We're gonna get better. We're gonna improve.
Yeah. Next Thanksgiving we're gonna be half good.
I like that. Half good. We get the quarter good. Half bad. Quarter okay. I'm kidding. It's a pleasure. It's been fun doing this. Thankful for the show. It's been a new addition to my content suite, I guess you could say.
Portfolio. How about portfolio?
Yeah, the content portfolio. And I've said this before, but it really allows me to scratch an itch that can't really scratch on Rabbit Hole Recap all the time, or TFTC even for that matter. So thankful for this, gentlemen. Enjoy your Thanksgivings.
We got to blur out Rabbit Hole Recap on this. So if anybody, there's a lot of listeners that may not have ever heard of it. We don't want them seeing Marty Jones and
go check it out. So. This is top of funnel for Rabbit Hole Recap. This is if you're listening to this, you've already eaten your Thanksgiving dinner. Hopefully it was a good one. You enjoyed it. Hope you're safe. Your Bitcoin's safe. And that you're doing well out there. Michael, you look like you want to say something, Michael.
I was just going to say, I didn't know if we were going to drop this before Thanksgiving. Like, it's a travel Wednesday. Do we decide on the air right now?
Just forget everything I just said and go forth and enjoy your Thanksgiving. Logan, we're dropping it tomorrow. All right, gentlemen, as always, it's a pleasure. Andy, thank you for joining us.
Pleasure's all mine. Stoked to be a member of this elite team. We're going to do great things.
Hell yeah.
We're going to win. We're going to win.
Love it.
See you guys next week.